Hey guys, hope you all doing well. Today I'm bringing you another closed-end fund that you need to put on your watch list. It could possibly be a buy right now, to be honest with you, but it's one that I really like. If you tell by the title, yes, you can beat the S&P 500 with a closed-end fund that charges a 1.5% expense ratio. It can be done. It's very rare, but it can be done. So if you're new here, please like, share, subscribe, do all that good stuff. And the pinned comment down below is the way you can support the channel. M1 Finance, Amazon link. I think Amazon Prime Day is coming up. That'd be a great way to support the channel. Just find the links down below. Shop with Amazon, and Amazon takes care of me with a small commission on qualified purchases, and I'd appreciate it. So another closed-end fund we're talking about today. And this one is in the utility sector. Somewhat, there's some infrastructure, I guess I would say, in this one. But it's kind of a concentrated utility fund. Pays monthly, pays about a 6% yield, which ain't bad, and gives you capital appreciation on top of it. So we're going to just go through it real quick. If you missed my last week's video, I'll link that up here, up top and down below, because I go a little bit more in detail about how closed-end funds work. So I'm not going to really dig deep into how that works. If you want to know more, check out the last video. I talk more about it. So I'll just kind of gloss over some things here in this video. So what are we talking about today? We are talking about the Reaves Utility Income Fund. That's ticker symbol UTG. UTG. And where am I at here? Whoops, I messed up. Here we go. What it does is it essentially invests in the utility sector, some infrastructure. And the fund's objective is to provide a high level of after-tax total return consisting primarily of tax-advantaged dividend income and capital appreciation. From what I've found, this fund does not pay return of capital. So what it does is it seeks qualified dividends, long-term capital gains, to be a favorable tax treatment instead of short-term capital gains and unqualified dividends. So typically about 15% tax rate, dependent upon your income. I believe if you're under 40,000 and you're single, I don't think you get taxed at all on these distributions. So it intends to invest at least 80% of its total assets in dividend-paying common and preferred stocks and debt instruments of companies within the utility industry. The remaining 20% of its assets may be invested in other securities, including stocks, money market instruments, and debt instruments, as well as certain derivative instruments in the utility industry or other industries. Now, when you see the word derivative, that basically means options. So they may be, selling, buying puts and calls on stocks they hold, or even stocks they don't hold. It doesn't have to be in the fund. And that's not a requirement. It says it may be invested. So, they have freedom, leeway of 20% of its assets to boost its returns. So what else do? They do use some leverage. Now, that could be a double-edged sword, right? Because leverage could be used to boost return. So if they see an opportunity and they don't have the cash, right, they can essentially borrow money and boost the return. Now, if they're right, it's a great thing, because you're borrowing money at 2% or whatever, and then you're making 10% or whatever it is that they're buying, if they're right. But if they're wrong, that could be bad, right? Because say whatever they invested, if they leverage themselves, drop 10%. Well, you not only drop 10%, but you're also paying interest on that drop money that you've lost, if that makes sense. So to read that, one advantage of closed-end mutual funds is the ability to use financial leverage as part of the overall investment strategy. The fund expects to use financial leverage through the issuance of preferred shares and or through borrowings, including the issuance of debt securities. The fund intends to use leverage initially of up to approximately 38% of its total assets. Now you'll see that they don't use 38%, and we'll go over that later on in the video. So what are their holdings? We'll check it out. We'll check out the top 10. This is as of May 31st. With closed-end funds, they're not required to be transparent like ETFs. ETFs are supposed to disclose their holdings daily, so you know exactly what the fund is doing every single day. Closed-end funds are essentially privately managed portfolios, and they're not required to disclose their activities every day. So we'll look, there's some pretty recognizable names on here, mostly in the utilities. If you follow the utility sector at all, their number one holding is BCE. Number two, probably the most one of the most popular, NextEra Energy, Verizon. Everybody knows Verizon. TELUS Corp, Altice, Charter Communications, WEC Energy, CMS Energy, American Water Works, so water company, and Xcel Energy. So that's the top 10. We could go through the full holdings, but the actual full holdings is from March, so I chose not to go into that one. Now, one thing I do want to say is on the tax portion, if you're researching closed-end funds, you always want to look and see how the taxes are, how the distributions are issued, right? I mean, if they're all short-term capital gains, you know that you should probably hold that in a tax-protected account. If it's all return of capital, you most likely will want that in a taxable account. And if it's long-term gains or qualified dividends like this one is, it's kind of a wash. It really depends on your own goals. So when you're looking for those, though, because if you click here to resources, and we'll go here to the fund news, right? A lot of times what you'll see is section 19A, and what that is the fund basically informing you of what they think the current distribution will be taxed as. You know, they think that's 80% qualified dividends, 20% return of capital, etc., etc. But that's just an estimation. So never go off the monthly reports of the distribution statements from the fund. Go off the final. And if the fund's paying a return of capital, that form will be Form 8937. So if you look for the tax form 8937, if they are paying return of capital, and then that form is the official form of how the total year distributions are going to be treated tax-wise. Now, on other ones that don't use return of capital, such as this one, you'll just have to kind of search for it, and right here you'll see section 19A, and then right here on February 10th 2021 they announce tax information. So you want to click on that, and I actually already thought I did. I guess I didn't. We'll zoom in on this, and Reaves Utility Income Fund announces 2020 tax information. So this is the final tax status for its 2020 distributions, not its estimated. When you get those section 19A forms, those are estimated, and you'll see right here they'll list every payment, the amount per share, and the amount that's qualified, which is 18.73% here, and then long-term capital gains, which is 81.27. So those both qualify for a better tax treatment than non-qualified dividends, which would be short-term capital gains. You know, it's a little worse per se than return of capital, which isn't taxed at all, but it really depends on what you want to do. So always look out for that, right? Always look out for the taxes. Now we'll go over here to the CEFConnect.com site, and I'll show you what it's selling for currently as of June 16th. Current price $35.22. The net asset value is $34.34. So that means that's a 2.56% premium to the net asset value. So it's always best to buy at a discount. Like I said, I go into this deeper in the last video. Check the pinned comment. But the average on this fund, the 52-week average, is a 1.6% premium. The 52-week low that this ever got was a 1.35% discount. So it's right in range to, you can buy this thing right now, I think. It does pay 6.13%, 18 cents a month, and it pays it monthly. And what I wanted to show you here is a nice chart. If you look at since inception, you usually don't see this on closed-end funds. You usually don't see a chart that goes from the bottom left to the top right. It's usually very rare because most closed-end funds, their first objective is income, period. Capital appreciation is a secondary happening, right? It's usually not, they don't go for that. These are mainly income vehicles. So if you find one that gives you income and growth, those are usually winners. And you'll see net asset value started way back in 2004 at $20, and today it is $34.34, which is a great return for a closed-end fund. Now, I wanted to look real quick at leverage. They do use leverage, $345 million currently, and that amounts to 15.7%. So they can use up to 38%, and they're being conservative and using only 15.7. There is about $2.2 billion in assets. Now, the fees are quite high, as in all closed-end funds. You're looking at about 1.1% roughly in management fees and other expenses, administrative expenses, and then 0.41% in interest expense for a total of 1.5% expenses. So when you see 1.5%, know that part of that is paying for the interest expense of the leverage that they're using. Now, when I say leverage could be a double-edged sword, you can see that here way back in 08-09 crash. You see the price went from, what is that, about $26, and it went all the way down to like $7. Now that's what leverage can do to you. So if you don't have stomach for leverage and the volatility that leverage brings, maybe you should look for a fund that doesn't use it. But what could also happen, though, is the other opposite direction. If you this was a smoking buy at like $7 back in 08-09, you know what I mean? So, and that leverage allowed it to recover a lot faster than if it were unlevered. But then again, since it's levered, it dropped tremendously more than a non-levered fund would. So, like I said, double-edged sword there. Now, that's it. That's my spiel on the Reaves utility income. UTG, I like it. We'll go through I said it did beat the S&P 500, which is unusual, and for a closed-end fund. And just so you think I'm not playing, we'll check it out, and we'll do it from inception. And we'll chart 10,000 invested in UTG versus the S&P 500. We'll click on that, and there you go. UTG total return 487.06% with dividends reinvested versus the SPY's 406.11%. Average annual total return of 10.77% for UTG and 9.83% for the SPY. Now, I don't know if you can see that, but you'll see UTG really outperformed the S&P 500, but then it fell further, even though it fell further than the S&P 500, but it was higher, if that makes sense. So it fell, pretty hard in that 0809, but then you can see after that leverage kicked in. They may have took on more and just bought the dip, and it just took off, and it's really outperformed the S&P 500 since. And you'll see this is probably March, and it dipped a lot more than the S&P did. So that's the leverage, and that's the volatility that you're going to have to live through with UTG. We didn't look at distributions. This is also a somewhat rarity in the closed-end fund world, and that is increasing dividends. Now, it doesn't do it every year, but it definitely has never cut its dividend, even back in 08. I think, no, they didn't. I think they skipped a month and made it back in 1 month or something there. But if you look back it started out paying 9.67%, then it went to 10 cents, 11 cents, 11 and a half, 12 and a half, 13, 15, 16, 17, now paying 18 cents. So it's doubled its distribution from inception, and that's extremely rare for a closed-end fund. So I like this one. I might get into it. It's hard for me to buy something at fair value. Don't know why that is. I guess I'm just I won't say it, but I'd like to see a discount from it. If we can get a discount from it, I'd be a little bit more excited on this one. But great defensive sector, good dividend growth, good capital appreciation. What else? What's not to like? The expense ratio is not to like. The leverage is a double-edged sword. So there you have it. UTG. Give me your thoughts. Leave them down below. If you need to know more about closed-end funds, I'll link that ETV video up top and down below, and go ahead and watch that one as well. So you guys have a great weekend, and we'll talk to you later. Thanks. Bye-bye. I am not a financial advisor. The information contained in this video is for entertainment and informational purposes only. It is not intended to be investment advice. Please seek a licensed professional for any investment, tax, or legal advice. Thank you.